welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live at yorbamedia.com. All right, Nick Santiago, president in the Money Stocks, on the show with me now. Nick, how you doing?
Very good, Michael. Thank you for having me.
All right, my pleasure. How did room go today?
Dynamite. We had one of the best trading days we've had in probably several months. We had tons of volatility. I think we put up 10 winners today.
Oh,
10 winners.
Nice. All right, well, tell me about it. What do you want to talk about?
Well, first thing I want to talk about was Chevron. This is a stock that we played today in the intraday chat room a couple of times for really good profits. But when you look at this on a swing trading basis, meaning a hold for several days to a couple of weeks, you don't want this equity right now. But when this stock gets down to around the 114 level, I think that's a spot where traders should inch into Chevron for a pretty significant bounce. Stock can easily bounce from at 114 anywhere between 5 and 10 points rather quickly.
Okay, all right. You traded that one today, both sides, or just downside?
We traded that one both on the long and short side. I think we traded that 3 times today, actually, already. So, we're done with it now for the day. We're not going to trade that one anymore. But it was we had 3 successful executions today.
Perfect. All right, what's next?
Next one on my list today was Goldman Sachs. Goldman Sachs was a stock I talked about, over the last few weeks in your room, in your radio program, and I've said this stock wants to get down to around that 155, possibly 153 level. So you still have a little bit more downside on Goldman Sachs, but you're going to be coming into some pretty decent support, especially around that 200-day moving average on the daily chart, which is around 152.64. So around 163, I think that's where traders need to start looking at the long side on this equity for a bounce.
Okay, all right. I'm getting the feeling that you're getting your portfolio set up for longer trades going forward. Let's go to the next one.
You're right. You could tell, huh, Michael?
I can.
Okay.
I feel it coming.
And that's the beauty of the market. A couple of weeks ago when we were on your program, I said, "Hey, this market looks very vulnerable to a sell-off."
You did.
And we've had quite a nice little dip in the market. Now, I start to position the other way. Like I said last week, we're good Samaritans. When somebody don't want something, we'll take it off their hands, and when somebody really can't take it, we'll help them out. So that's what you want to do as a trader.
And when they gotta have it, you'll give it to them.
That's right. When they have to have it, no problem. I'm here to hand it to you.
Okay. All right. What's next?
The next one I want to talk about was GDX. This is gold miners ETF, and I've been getting flooded. Beyond belief with emails and phone calls about, hey Nick, when can I get in this GDX? And the GDX, we were long this equity going into the Fed announcement on the 18th of September. We made some pretty good money. Stock popped about 10% that day. Since that time, we're out of the equity, and it is now pulled back, and it is closed below the low of that September 18th low, which was around 25.47. That's a bearish indication, but I think what traders need to do now is wait on the GDX, let it give you a better pattern on the chart. Right now I'm showing support around 23.50 to 23.75, but I would not pull the trigger on it until it shows me a pattern that looks like it can make a substantial move to the upside. So right now I would just want to warn traders, because I'm just getting flooded with emails about gold miners, to hold off on them. Let them show us a better pattern. Right now you're going to have some minor support around the 23.50 to 23.75 level, but it still isn't giving us a trade setup.
Okay. All right. Looks good. What's next?
Next one on the list today, well, I think I covered all. Oh, is Apple. Excuse me. Forgive me. I want to talk about Apple again. Apple's held up very, very well during this downdraft. The stock has not made new highs. It has not gotten above the high of August 19th. But it is showing some strength here. I think Apple right now, if it can give us a little bit more of a sideways pattern, is poised to go up a little higher. But my max move, the most I think Apple can go higher to the amount Apple can trade to, is going to be around 535 to 537. Do not look for any higher than that.
Okay, all right. Are you? I take it obviously you're ultimately bearish on this. You're just looking for another place to short it.
Around 537 is a spot I would probably look to start to short it. Yeah, depending on the pattern and how it gets there. But yeah, that would be a spot for me where I think Apple will really struggle. And right now we're not bearish. We're actually, a little bit bullish on the name. But when we get to around 535, 537, depending on the pattern, that's where I probably will look to short it.
Okay. All right. Any other equities before we move on?
That was really all I wanted to cover today. So I'm free for you now.
Okay. Let's start with the basic. Everybody wants to know what your thoughts are on the S&P market.
Well, when you look at the S&P 500 right now, we pretty much topped out when I was on your program, and I said I thought we would, and that was really right around the 19th or 20th of September. So we've had a pretty good decline from there. Right now, I'm looking for a little bit more of a decline in the S&P 500 cash, maybe down to around 1645. I think that's going to be a level where the markets are, probably getting ready to make a bounce. I don't know if it's going to be a sustainable move just yet. We're not into the seasonality part of the year where, we're going to get a Christmas rally and all of that. Right now, I think it would just be a bounce, and we probably would stay range-bound in the S&P 500. But I'm really only looking for a move at the moment down to around 1645.
Okay. When you say range-bound, what's the other side of the range you're thinking about?
The other side of the range is probably, 1715, 1718 on the S&P 500.
Okay. All right. All right. There's been a lot of question about what's going to happen with interest rates real soon. Tapering, not. What do you think about the bonds or the note market?
All right. Well, when I look at bonds, I'm always looking at the yield. And right now, when you look at the 10-year Treasury yield, we're right around 2.6%. I still think there's just a ton of support here. I think we're going to flip-flop between 2.6% and about 3%, maybe 3.02. Ultimately, I really think the market's going to stay in a range here, but I have a hard time, at least at the moment, thinking that yields are going to go considerably lower from here.
Okay, all right. The dollar is. I want to get your opinion on that. The U.S. dollar.
Yeah, the U.S. dollar is basically into, I think, what we're going to see is a low. So I really have a hard time thinking the dollar goes much lower from here. Right now, the U.S. dollar indexes are trading around 79.85.
Right.
I think anywhere between 79.50 to 79.75 is going to be just a ton of support. So it's really difficult for me to see the dollar go much lower. I think it could trade down a little bit more, but really that's not much more from here.
Have you been watching the copper market lately?
I always watch the copper market. Yes.
Okay. What do you think about it?
Well, today, copper is trading, down to around 3.27. Ultimately, we're getting to levels where I think it's starting to look a little bit interesting. You can own copper around 319.
Okay, 319 on the copper market. 319,
you can buy copper. I think you're going to get a pretty decent pop. Again, that's another range-bound commodity, so 319, you could probably trade that up to around 340, 345 maximum.
Okay, all right. Let's J.P. Morgan. I wanted to get a check with you on the banks. What do you think about that? What's it telling you?
Well, right now, J.P. Morgan is definitely one of the weaker ones, and it's been such a leader throughout most of 2013. But obviously, the stock's peaked out in July. I don't see the stock getting above 55 at all. And in fact, 55 could be a potential shorting area. I do like the equity on the long side at $47. So we're kind of in the middle of the range there. This is successfully tested the 200-day moving average in the near term. So it looks like it may want to go test 54 ultimately before it's all said and done. You could see that move that it had on the chart, I believe, on the 25th of September. It was a pretty good bullish pop, and price has not exceeded that low. So I'm going to give J.P. Morgan the upside to 54 in the near term, but ultimately I think it's coming back down towards 47.
Okay, all right. Last but certainly not least, you brought up FedEx a few times, transportation. What do you think about it?
Well, I like to follow FedEx because I think it's the leader of the transports. Right now, the stock has a ton of support around 108. That's a level, and the only level I would get interested in it at this time. I would not be buying it here at all. It gets down to 108. That's where you could take a shot for a bounce and, maybe trade it back up to 115, 116 again.
All right, sounds good. Last minute in the show, tell me how our audience can reach you, what they get when they obviously 10 out of 10. That was a nice run of trades.
It was a great day today.
Yeah,
great day.
But how do they reach you?
Yeah, come on over to In the Money Stocks. You could take a 7-day free trial to our intraday stock chat. You'll get all of our scalp trades that we do each and every day. You'll also get our morning gap plays that I give out at 9 a.m. before the market even opens. Come over, take a 7-day free trial to our research center. You'll get all of our nightly setups, all of our swing trades, all of our cycle work. You'll get our nightly videos. It's just a ton of information that comes out each and every night. And by the way, Michael, this Saturday we have the In the Money Stocks methodology webinar that will take place at 10 o'clock in the morning, and it will probably end around 5 or 5:30 in the evening. So that's East Coast time. If anybody's interested, just come over to the website. They can sign up there.
Sounds great, and thank you for continuing to thread the needle from 1,000 yards out.
Thank you for having me, Michael.
All right, you're welcome. Nick Santiago, President, CEO, InTheMoneyStocks.com. You heard him. Hey, can you get any better than this? This is amazing. You guys make me look so good. All right, coming up next,